Steve Miller, Happy New Year, buddy, and welcome back to F.A.C.E.
Hey, Dale.
Hey, really looking forward to talking to you today, Steve, because
Well, I was looking forward to being here.
all right, cool, because I have a decent memory when it comes to what other people say, not what I say. I could just be a revisionist, but I do recall on our last conversation, you said the market would bottom in October and that we'd have a rally. But that's not going to be the low in the market, and you thought it might happen this coming spring. And I've noticed that really has become, back then it wasn't, but it's really become a consensus opinion. Are your cycles still saying the same thing? And was I
Absolutely.
correct?
Now, are you cheating
Okay.
and watching my more recent shows?
I
That's
have
what
a
I want.
webcam. I have a webcam in your office, Steve.
Yeah.
So, anyway, the NSA provided it to me, and I'm
Yeah.
just about intelligence stealing from
Yeah.
everybody.
That's my analysis has not changed. Actually, it was at the end of 21, beginning of 22,
Yeah.
that I did the year-end show, and I talked about the markets coming down almost exactly to the levels they did at this timing. So
Okay. You want to share your screen, buddy?
it was a really good year for the analysis. Sure, I'll share the screen and I will show that.
Okay.
So let's see. You should now be seeing the screen that has the S&P 500 weekly on there.
Okay.
You see that?
Got it.
Okay, good. So what you're looking at here, and there's going to be a lot of people that say this is a bunch of spaghetti because they're not familiar with this style of analysis, but we look at the energetic movements in the market. Those are repeating cyclical patterns. And once your eye gets trained to do this, it's very obvious. And we have 4 analysts that do this kind of work at Slim. What we were looking at here, right in this area right over here at the end of 21, beginning of 22, was the likelihood of a peaking market based on some of our longer term work that was right in this area. And once this cycle, now I want you to note the cycles that we're looking at the bottom right in here, and there's a more dominant one, the dotted line there. So this cycle resolved itself like this: bullish, as it makes a higher high and higher low, bullish. Then it made this negative cycle right there that warned us that there was a top forming. And that's actually how Head and Shoulders form, by the cyclical action. You could see the left shoulder and the head and the right shoulder. Once, I'll take a little closer look right in here. Once that right shoulder formed, and then this important low broke, that confirmed that the cyclical pattern was declining. The minor cycle makes a low here and the minor and dominant low over here. Now it can be plus or minus a few weeks, so that's not that significant. We were looking for a temporary low right over here coming towards the end of the year. We thought it would come either late December, early January, and then a rally back up into these resistance areas. So we were calling for a January rally in the stock market, which took a little while to get traction in there, but now we're looking like we're getting that into these resistance zones. Now, these yellow ovals that you see are areas where the dominant forces are pushing to the downside. They're the most likely areas to get decline as money flows move back to the downside. You see the failure in resistances here as it brought it back down, and the minor resistances here.
Yeah, the yellow, so it was,
the yellow area really is coming up over here after this rally is over with.
Once so start the end of the month, Steve?
Well, you really have to go to a daily chart to really see that, to get some idea of that. And I'll show you that right over here. Here's the cyclical patterns on the daily charts. And you can see the phenomenal cyclical movement that's in here. And we were projecting, and you could see the inverted head and shoulders right in here as that formed. And that was that was formed by these cycles right in here. And now we have actually 2 projections in there. The highest probabilities it gets up into the sell zone right here. That's let's just call it 39.30 to about 39.75. That's the highest probability, the lowest probability, but still, I would say this is 70%, this is 30%, that it gets up close to 4,100 in an upside panic. But then you get into this area right over here. So our work on implied volatilities on the VIX suggests a late January peak of this rally. The reason for that is the VIX shows a late January low, both on intermediate and short-term cyclical patterns. So we've been looking for a rally into late January, even though being negative, but just the way the patterns work out. So we would look for this rally to continue for probably at least another 2 weeks, maybe 3, before we get into the short-term period of downside risk and then this intermediate period of downside risk. And based on the highest probabilities, it would be a test of 3,500 on the downside, with the potential getting to as low on this fib projection as maybe 3,333. During that time frame. Now, were this to decline and not make a lower low, that would be a pretty good sign. That would just simply say that this next rising phase out over here has a very good chance of getting up into these higher resistances, maybe even 4,300. But we have called this year to be a positive year, even though not real positive. After the spring low, then probably the Dow making an all-time high because money is moving into those stocks because the
quality.
The growth stocks are done, and people that are bullish on the growth stocks, the FANG plus stocks, are going to be pretty disappointed by how quickly the rallies fail in there. And then I think you're going to see the S&P 500 fall pretty short of the all-time highs this year, even though you're probably going to have a good rally from sometime in the summer into the fall. With they call them the moat stocks, the ones that are the top leaders in the individual groups. Those are probably the ones that are going to be the movement into safety. And that's why I think the Dow could actually make a new all-time high this year, with the broad market falling way short.
Okay, I do remember you being sanguine about gold, and you said it was going to move lower, but you weren't worried about it because it sounded like you had a lot of conviction there was going to be an important buy there.
Gold
and that manifested.
Gold is really interesting in that you can see our big cyclical patterns right in here, and we were looking for a low to come in gold out over in this area. It could have bottomed actually over here in that 1677, but it's not the worst thing that it bottomed where it did here. And you could see we actually had a potential low in that area, but it likely shifted out a little further, and that was okay with us. Then we were projecting that this major dominant cycle here would bring it to all-time highs sometime in coming years. And our monthly work shows that also. What's really, I think, interesting right now is that with what we see in the amount of gold being bought by Russia and China, and actually silver is being bought by India, not as much gold, I think there's a major move by the BRIC countries to overthrow the U.S. dollar. I mean, they really want to do that. Now, I'm not really bearish on the dollar right now, but I think that they want their currencies to be the sound currencies in the world. And that, I think, is going to push gold surprisingly higher during this period. Now, you see, we only have it projected modestly up to this resistance level right now, which is around 1900. But the truth is that this really needs to be upgraded, because the probabilities of getting over 2100 in the next 1 to 2 years are very high. And maybe it's 2500. I mean, I really haven't projected that. Now, I'm not as bullish.
It looks like shorter term, you think it might be vulnerable to a pullback. Am I reading it correctly?
I'm listening to what some of your people were talking about who are bearish on the dollar. I'm bullish on the dollar right now. I mean, I think the dollar has a period coming up. I'm going to go to short-term gold in here. And you can see we're kind of looking for gold to come down into here on the short term and then, really get an opportunity to buy it again. I think it's a buy between 18 and a quarter and 1790.
Yeah,
right in there. to go up again. That's where the supports are. Supports are actually rising in here, so they may be a little bit higher. But we have a major bottom or intermediate bottom being in the process of being formed in the dollar.
Well, that's interesting. That's very contrarian right now.
It is actually, and I'm just going to go to the weekly dollar right over here and show you the bigger patterns right on here. And we were bullish in the dollar and then bearish in the dollar, and you can see that the patterns right in here were these this minor cycle and dominant cycle coming down right in here are where this should be coming down to. Now, this is you can see in here, I haven't been illustrating this, but this is our proprietary indicator, the SLIM Reversal Scout, and you can see where it turned negative right there. Yep. Where it turned positive right over here. It's still negative right over here. And all of the momentum indicators are still negative on the dollar. However, we're getting into this bottoming area right over here. And I think that the relationship between the interest rates in the U.S. And the situation in the U.S. And the interest rates in Europe and the situation in Europe are going to bring a dollar rally also, despite the fact that the cyclical patterns suggest that. And that might be, we're not projecting it to get back up to the panic levels up here around 115, but it's very reasonable in these next 3 months to test 108.
Okay.
So, and
50%
that would be,
or so.
Yeah, it's actually 32%, 38.
That's weak. Yeah, it's weak. Yeah. That's a weak rally, but it still would shake people up.
It's still a rally. It would get the metals pulling back down. It would be, we're super bullish in copper, but that might slow that down right now.
We're right at major resistance in copper, right at the breakdown today.
Yeah, I'll look at that for you in a second. But you could see in here these dollar cyclical patterns. They're just gorgeous. And the short-term pattern is due to bottom right now also. I think it's a little capitulation going on.
Okay.
And I think the dollar is going to be going up. And I just think that Europe's situation is really bad. And I think that the euro currency, I'm just going to go to
back to par.
I think the euro currency is just getting ready to roll over. That's your daily right there. So it's just, coming up and testing those highs. Yeah. And here's your weekly, and you can see that gorgeous head and shoulders that made that top. And this is actually a very bullish pattern here for the intermediate and longer term in the euro. Now, I'm looking for this pullback over here into late February, early March. That will give that dollar lift that we're talking about, because you could see this cycle coming right in here for that bottom. So you get a dollar lift right in here, but then the dollar doesn't go a lot further than just these next, 3 months basically. And then euro gets stronger again right over there. So the dollar doesn't have a lot of time, but that would be probably giving a good buying opportunity for the metals in there. Copper market that we just talked about is just a spectacular pattern, and I'm listening to your guys talking about Powell and being bullish on the markets because the Fed is almost done. I really strongly disagree with that, and that might.
You like copper because of what's happening in China, Steve.
I kind of think that it's the China getting past the COVID lockdowns and all that. Look at this magnificent pattern. I mean, it's just one of the strongest patterns you will ever see. And the copper market looks great. Yeah. My minimum upside projection is about 435 in there, but I think that's really going to go much higher, but it might just rest out in here on this first minor cycle before it does get to take off in there.
Could we wrap it with yields?
Yields?
Yeah.
You can. The yield market in here, and I'm just going to go to TNX, which are the 10-year yields, and that is the yield market essentially made a low. And now the question is it testing that low or not? You can see right now that low was early right over there based on what our projections were. It wouldn't be ridiculous for it to come down and test the 344 area. But what is very clear to me, and if people are thinking that, the stock market's going to explode to the upside and run away, and we're going to continue with the bull market. They're living in an old paradigm. And that the Fed is done with that. Fed is completely done with that. They know they have made massive mistakes, and between government insane money being printed and the zero interest rate policy for so long, we have a lot of problems right now. And that the reset that has to go on is going to take years and years. Not people looking for the Fed to come down and to pivot in this year. I think it's insane, to tell you the truth. They really have to be very, very tight for a long period of time. And they were very clear. We do not want the financial markets to counteract the work that we're doing. They're not going to let yields in these futures markets go down anymore. They're going to get in the way.
The market is fighting the Fed. So tomorrow's going to be a pretty good example of the Fed fighting back, isn't it?
Yeah, they are. And you're not going to get Powell to say anything that says, that is bullish or interest rates are going down. Some of these, if you listen to Fed George, the likelihood of interest rates reaching a level, which is probably 5.25, and the Fed staying there until 24 is very high. And she has no reason to lie. She's leaving. So the interest rates are going to stay very high. And I think that the hope for interest rates, pausing is the best hope you have, and that's going to be over 5%. Interest rates could get back up to this over 4%. That's what we're projecting right over here later on this year. And if not, there's this doom loop going on in between commodities and interest rates, and that is that if interest rates fall, commodities are going to rally. They're going to take off like crazy. And that's going to bring inflation back. There's no way that you can get inflation to fall here very significantly. Best case may be, year over year, 4.5%. Best case, that is way higher than the Fed wants. And the Fed is going to stay very tough. We did our year-end show back last week, and you can go back and see that on YouTube. And I believe that we have through this decade of the reset going on with bull markets and bear markets, just like we had in the 70s, but a world in which there's going to be disillusioned stock market investors.
Yeah, and disillusioned employees at Bed Bath & Beyond. That rates won't matter. Do you think we're about to enter a period, Steve, where we have some credit events that hurt the market, or possibly the bond market? We went through this phase, and now solvency and credit spreads never really blew out. Do you think that's still missing?
I actually think that if you go back and look at what 2000 looked like, coming off the .com or the great financial crisis, things are very different now. Now, you really have to give some credit to the Fed, to the government, and I absolutely despise them. So it's really hard for me to do that. And that is, they really made the banks solvent. And so they got tons of money, and what they've done in things like the repo market and put in facilities in there that they could loan unlimited amounts of money, essentially, while that is super inflationary and is incredibly invasive in the markets. It still does create a cushion in there. So I don't really think you're going to get that type of deflationary issue going on. I think there's a lot more risk of inflation until the day comes when the built-in deflation takes over again, and that really is an unraveling of the energy markets in the world. When alternative energies when technology catches up to where alternative energies really take over, then the fossil fuel market is in trouble, and that's going to bring the next deflationary wave, and that could be some number of years away.
Okay,
so
interesting.
I see somebody asked there about recession on the on the
Yes.
chat there, and we're, I think you're already in a worldwide recession right now. I think the United States is probably going to be in the better shape of most of the other markets out
Could
there.
that better shape, Steve, be that the majority of Americans, although rates have gone up, locked in their mortgages under 3%, which gives them a cushion that other countries like Canada, where there's much more variable rate mortgages, can keep this consumer kicking longer because it's almost like $1,000 worth of income every month because they're locked in at 3.
Well, I think that might be a smaller portion of the economy than you're suggesting. It is
Okay.
it is a benefit, of course,
Yeah.
but
Yeah.
I do think it's a smaller portion of the economy. It's probably offset by certain parts of the industry, like the refi aspect
yeah.
of the industry, which is crushed,
Yeah.
but again, just like the great mortgage crisis, you don't have the mortgage issues now that you had back over then. So it's different. The crisis now is different, and I think that the biggest portion of that right now is that we were living in an unreal world, and that is. And you can look at cryptocurrencies or NFTs or SPACs or a crazy 200% stock market to GDP valuation to the craziness that was created by the government and the Fed over this last decade. And now we're in the reset phase of that. And people, I think, are going to be shocked by how long that takes.
So we're correcting all the malinvestment from free money.
Yeah, I mean, just go back and look at other corrective periods. You can look at, 1929 to 1942. That took 13 years. You can look at 1968 to 1982. That was about 14 years. I mean, those are, periods where it digested massive economic growth periods and Fed invasiveness, government invasiveness. And what happened was it took a long, long time to correct that.
Steve, outstanding presentation. I have one last question if you want to
Sure.
answer it. What's your best trade you're looking for? And
well,
I used to say all of them. I used to say all of them, right?
I look, we look at over 300 stocks in 24 different futures markets and indexes.
Yeah.
And so there's a lot in there. I mean, I just showed copper. We have been talking about copper as one of the best trades right now. And I think that looks really good, even though it might have some pullbacks in here. And then I think if the S&P 500 gets up close to 4,000, that short side trade is going to be one of the best trades.
You're brilliant because I agree with almost everything you say.
That makes you brilliant, doesn't it?
Steve, really, I'm rooting for you this year. Best way for people to find you and look into working with you.
Yeah, well, all you have to do here is go to AskSlim.com. As you can see, you can start out for $45 getting our 3-month level 1 membership, and they're going to get daily information from us, especially if they're short-term traders. They're going to love that. There is so much in here in our website. We have really 5 different membership levels that you can see right in here, all the way from free all the way up to $239 a month, depending on what they really want. So we have just a tremendous amount of information that we give. We don't give trades. We teach traders how to use our style of analysis and then really get a good sense for who we are. If you go to the workshop tab right over here and you see cycle analysis workshop, there's a video in there, and our cycle analysis workshop took me 2 years to write and to develop, and there's a video right in here, and it's going to tell you all about it if you just watch that. So you'll learn so much about what we do just by going to our website. And if you have any questions, just write team@AskSlim.com, and our team will be able to answer anything for you.
Where do you trade from, Steve? Where are you?
I'm in Sarasota, Florida.
Okay. All right. Well, Steve Miller, you always present elite analysis. Appreciate your giving spirit to come in here and edify the F.A.C.E community, my trading warrior brother.
Well, glad to do it. And look forward to next time.
Yeah, I'm glad our paths cross on Twitter.
Yeah, for sure.
I really love your work, Steve.
Thanks,
Thank you
Dale.
for sharing.
Appreciate that. Yeah. Glad to
All
be
right.
here.
So
Okay.
Steve Miller, follow him at Ask Slim and take it from there. People are saying thank you. They're Steve Miller Band. Yeah, they were pretty good traders too. And thanks once more, Steve. People enjoyed it.
Okay, thank you.
All right. You
Bye-bye.
could join the team in 20 minutes on the Morning Edge. I think Steve laid out some value added for everyone that heard him. I know he did for me. So adios, everyone. Don't just count your pips, count your blessings. And the power of number 3 showed up in the NFL. Result, love. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.